Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and happy Monday to you. You're watching All You Need to Know on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines. Asian markets are off to a subdued start in the new week despite equity markets in the US closing near all-time high levels on Friday. Baring PE and its arms will acquire up to 56% stake in NIIT Technologies, and that includes a 26% open offer in a near 5,000 crore deal. In more news from the merger and acquisition space, Lakshmi Vilas Bank announced a merger with mortgage lender Indiabulls Housing Finance in a share swap deal. The deal is subject to regulatory approvals. Tata Steel's production in India rose to record levels in FY18. That's after the acquisition of Bhushan Steel, according to a company statement. And former BJP MP Shatrughan Sinha joined the Congress party on Sunday. The two-time MP will contest from the Patna Sahib seat in Bihar against Law Minister Ravi Shankar Prasad. Let's start with talking about the session on Friday on Wall Street. Stocks ended higher as investors cheered a strong jobs report, and there was also optimism over a trade deal between the US and China. Now, the S&P 500 also reported its longest winning streak since October 2017. Renita Young of Bloomberg News tells you exactly what happened in this report. All right. Well, it seems that we have a bit of an issue with that update for you, but just to tell you a little bit more about that jobs data that came in, it came in a little over 190,000, and the expectation from economists was that it would come in at around 175,000. All right, well, it seems like we have that report for you, so listen in to what she has to say.
U.S. stocks climbing to all-time highs as the U.S. added more jobs in March than originally expected, and the unemployment rate stayed near those 49-year lows. The S&P 500 saw its seventh straight day of gains, the longest rally since 2017, headed back toward that record high that it reached in September. And investors taking on riskier assets as the U.S. and China made more progress with trade talks. Now, we did see that same jobs report help to lift the U.S. dollar versus major currency competitors, as well as flatten the Treasury yield curve. The Bloomberg Commodity Index saw its fifth straight day up, and WTI posted a fifth consecutive weekly gain. That's the longest streak of weekly gains since 2017. Snap rallying as analysts saw its new products as promising and driving more engagement. Wells Fargo, however, downgrading Intel, citing weak semiconductor demand, and Corbus Pharmaceuticals rated as buy by Jefferies from the very start based off of its new cannabinoid drug, which could help resolve chronic inflammation in some diseases. Meanwhile, Bed Bath & Beyond rating raised at Morgan Stanley because of activist shareholder support. The activist shareholders are trying to overthrow the CEO as well as the entire board. And that's a look at your Friday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's also take a check of the Asian markets. I'm joined live by Rosalind Chin from the Hong Kong studios. Good morning, Rosalind. Well, it seems like it's a bit of a flat start, at least for the Nikkei, and the early risers aren't really taking up from that strong close on Wall Street on Friday. How are we looking at the start of the week, though?
Yes, we did see a very cautious start earlier in the session from Japan and obviously on the MSCI Asia Pacific Index. But I think we're going to see a bit more positive trading going on as the session goes on now that Hong Kong, China and Taiwan are back online. They were, of course, on holiday for a day on Friday for a public holiday. So we're seeing the MSCI Asia Pacific Index gaining by just under 1/3 of 1%. The Nikkei just about flat. The topic's actually losing about just under 1/5 of 1%. But the Kospi making gains gains. Hang Seng, as I mentioned, opening not long ago, up by 0.75%. Shanghai Composite up by 1%, and CSI 300 making gains of about 1%. Now, overall, I think we did see that there were some numbers out from Japan on the current account surplus there. The trade surplus is at 489.2 billion yen versus estimates of 591.3 billion yen. We've had some comments from the BOJ Governor, Haruhiko Kuroda, saying that the economy is expanding moderately, so not a lot of change from his usual discourse, but they're saying weakness in overseas markets affecting exports and production. Now, we are seeing those trade discussions between China and US ongoing. Both of them are still sending out positive signals. The officials are continuing to talk this week. So that is still ongoing. Investors still waiting to see what exactly is going to come out of those. Indicators, though, are starting to point to more positivity, to a growth in the second half, globally, that is, economically. So investors are looking for positive signals there. Shane Oliver at AMP Capital Investors and also Ben Emmons at Medley Global Advisors are among those who are outlooking a brighter second half. So some confidence coming in back into the market there. In Korea, we did see one of the big conglomerates had some news. That was the Hanjin Group chairman, Cho Yang-hol. He's died aged 70, and Hanjin Group controls Korean Airlines. So we're seeing Korean Airlines actually did take a jump at the open, up by 6.6%. Now trading up by 4% at this moment in time. Perhaps some governance issues there helping fuel, and also some uncertainty about what might happen, fueling what's going on in Korean Air. Overall, the S&P ASX 200 up by 0.5% at this moment. CSL, BHP and Woodside among the main gainers there. And oil, just a quick look at that because that has been making gains, extending its rally as fighting in Libya continues and adding, of course, to supply concerns coming after, of course, OPEC deepening its supply cuts last week, with Saudi Arabia actually cutting to pretty much the lowest production in about 4 years. So oil, let's take a look. Brent at $70.66 a barrel and WTI crude at 63.44. Back to you.
Thanks so much for that, Rosalind. Well, let's talk a little bit more about the jobs data that came in on Friday in the US. The US economy apparently rebounded in March by adding more jobs. Remember, the job gauge had fallen to a 17-month low in February. US National Economic Council Director Larry Kudlow has told Bloomberg that he expects the Federal Reserve to cut some of its target rates despite the US economy doing well because of global growth concerns. Listen in.
Yeah, it's a good number. It's a very good number, 196 plus. When you put the revisions in, you get up to 211. I like that number a lot. I think the wages are still well above 3%. Hours worked are rising. And, even away from that, I just want to note, it's been a tough, between government shutdowns and lousy winter seasonal adjustments. But it looks like the economy is really coming back now and will be better than 2% in Q1. At least that's our hope. And then I think you'll get back towards 3% for the rest of the year. What's interesting here, last point on these numbers, this is very similar to what happened last year. You had a weak first quarter. We've had weak first quarters, I don't know, bad seasonals for years. But then the economy snapped back. We got 3% growth. It's a repeat, and I like it very much. And I think President Trump's rebuilding of the economy from the supply side with tax cuts and deregulation and trade reform, I think we're still very much in place.
Labour market looks solid. Larry, that's your view. You expect to see 3% GDP growth. Some people do share that very optimistic view. This is what I struggle with. How do you reconcile that very, very constructive assessment of the US economy with calls for the Fed to cut rates, Larry? How do those two things work?
Well, I think the issue on that is a precautionary issue. Couple points here quickly. Number one, we are facing a worldwide slowdown. Recession, arguably, I don't want to make that call, but Europe is not doing well. Germany itself may be in recession. That troubles us. Okay, that's point number one. Point number two, there is no inflation. There is no inflation. I mean, we're talking about maybe 1.5% max, and productivity rising at 1.8% last year. So wages are rising at whatever, 3.2%. That's being covered by productivity. Without inflation, why raise interest rates? And look, we just don't want any threats to this rebuilding, reviving, growing economy. And looking at the yield curve and other market-based measures, I think on their time. The Fed is independent. I want to emphasize that. The Fed is independent. But the president has said, and I concur, that I think that we could do at some point with some reductions in the Fed's target rate.
All right, well, that's the trade-off always between the government and central banks. But on to oil now, prices of which made a new high in 2019 after fresh supply-side fears are rising from Libya. Rami Inocencio of Bloomberg News tells you exactly why Libya is significant and what is happening there in this report.
Take a look at this map that I've got here, because this really does help to illustrate what's been happening in terms of the forces in the eastern part of the country. Khalifa Haftar, who has now basically taken over much of the oil crescent and the ports here seen in blue, and is now battling UN-backed forces, UN-backed militias just outside the capital of Tripoli here. Now, what's most important really is that what's happening is that there aren't many forces actually under the control of Tripoli, the UN-backed government, so they're relying on a lot of forces that are just allied with them. So right now we're trying to figure out what's exactly happening between those forces and whether they can actually push them back. So the biggest headlines that we're seeing right now is what's been happening just out here in terms of the conflict.
So, Rami, as Eastern forces try to breach Tripoli's defenses, what facilities are under threat in western Libya?
Sure. The most important one right here, highlighted in yellow, is the port of Zawiya. Now, this is most interestingly and most importantly linked to the biggest oil-producing region of Libya here, which is El Sharara. You can see this orange line here, which implies that this is the major oil pipeline that goes through here. So the biggest thing is, if the eastern factions do move in, do take Tripoli, the question is what's going to happen with Zawiya here. Also looking ahead, the question is whether this is actually going to impact oil production and oil exports. And follow me this way, because really over the past 10 years since Muammar Gaddafi fell, we can see that production has actually been quite unreliable in Libya. You can see that before that, over the past 10 years, from 2000 to 2010, production had been fairly stable there. But we can see all this volatility. And just most recently, interestingly, over in June of 2018, we also saw what's been happening with Haftar seizing 2 ports, and that definitely impacted some production. You can see that just in the little dip here, just at the end of the chart. But looking ahead, the UN-backed government is saying that they are going to do a counterattack, a counteroffensive, and that's called the volcano of anger, as they say, to cleanse Libyan cities of aggressors. The fear, though, is that this could be the bloodiest kind of fighting that we've ever seen since 2011, since the fall of Gaddafi, because the militia that are protecting Tripoli are actually very well experienced. And of course, right now we know that the battle continues to rage right outside of the city.
All right, well, that's the latest update of oil, of course. Brent crude trading just about the $70 per barrel mark. But we have Agam Vakil now to tell you all about the day's trade and what's happening in the futures and options space. Agam, you've had a busy weekend, going through all the numbers of that bearing deal that's coming up, but we'll get to that in a short while. How are we looking as far as trade is concerned? We've got polls kicking off and we've got big earnings this week.
Absolutely, and we're likely to see volatility increase, but for now, we're looking at the pause that we saw last Friday continue in today's day of trade, with the SGX Nifty absolutely flat at this point in time. And as I was suggesting, there was a little bit of come off for some of the indices last Friday, considering we saw, just about a 0.6% gain. And for the index, the mid-cap and the small-cap indices did certainly outperform, however. And we did see some weakness in the PSU banking index, but otherwise gains coming through. And well, how did your ADRs pan out last Friday? We had gains in Infosys, Vedanta, Wipro, and ICICI Bank, and marginal weakness for Tata Motors and Dr. Reddy's. But moving on to your fund flows, FIIs, buying stock worth nearly 790 odd crores, 800 crores to be precise, and DI selling stock worth 325 odd crores. Moving on, your contributors standing out with HDFC Bank, Infosys, TCS, and HDFC Limited. Not too much to speak for in terms of those which were, providing some amount of resistance, say for something like an SBI. But let's move on and talk about your futures and options space. And this is where things do get interesting. We saw longs return, considering the index moved up by around 0.6% for the Nifty and the Nifty banking futures again. well, also saw longs coming through with a 2.5% increase in OI. As far as your open interest distribution is concerned, well, it's largely around the 11,600 put where we have open interest. Moving on to your next slide, this is where your change comes through, and it is once again the 11,600 to 700 puts which was been writing. India VIX looking at a decline of 1.4% at around 18.4, still at relatively high levels. But moving on to your Nifty put call ratio, that's now at heady levels of around 1.61. So keep an eye on that against 1.2. Adani Power IDBI Bank in the F&O ban, as was the case for Jet Airways and Reliance Power. And we have Indiabulls Housing Finance, which is now entering into the ban. And it's seen a rise of around 10%. Watch out for that one. And in terms of other stocks, we're watching out for, well, Cipla, Ambuja Cement. PC Jeweler stands out considering the sharp up move for the stock. In terms of unwinding, we have the likes of SRF, Mindtree, and Amara Raja batteries. Well, in the fray, we're watching out for NIIT Technologies as well as we move into trade today, considering the big bearings deal. And besides that, we're expecting consolidation so far.
Absolutely. Thanks so much for that, Agam.
Yeah.
Well, let's have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
Secretary Kirstjen Nielsen has been asked to resign after President Trump renewed his public frustration about the situation on the Mexican border. She accompanied him on a trip to California last week when he had said the U.S. is, quote, full and cannot accept any more migrants from Latin America. The president is said to want a law enforcement type figure to head Homeland Security. Hanjin Group Chairman Cho Yang-ho has died at the age of 70 in hospital in Los Angeles. Cho took over from his father in 2003 and helped Korean Airlines become one of the founding members of the Global Alliance Sky Team. Last month, shareholders of the carrier voted to remove him from the board amid an ongoing trial for alleged embezzlement. Hanjin Group stocks are advancing in Seoul this morning. China is continuing to spend big on gold, expanding its reserves in March for a fourth straight month. The PBOC raised bullion holdings by 11.2 million tons last month, this after buying about the same amount in each of the previous 3 months. If China continues to accumulate the gold stuff at this pace throughout the rest of the year, it may end 2019 as the world's top bullion buyer after Russia, which added 274 tons last year. The latest on Brexit now, UK Prime Minister Theresa May says compromise is needed on both sides as Brexit talks with the opposition resume this week. She admits there are many things she and Labour leader Jeremy Corbyn disagree on, but says there are several areas where they actually see eye to eye. May heads to Brussels on Wednesday, hoping to win a further Brexit extension, this time to the end of June. The current deadline is on Friday. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
Well, last week was marked by a couple of updates with regard to mergers and acquisitions. Let's first begin with something that we've mentioned already. That's in the IT space. Baring Private Equity and its arms will be acquiring up to 56% stake in NIIT Technologies. The stake is inclusive of an open offer of up to 26%. Now, to tell you all about the value of the deal and everything with relation to who's acquiring and who's selling, I'm joined by Agam Vakil. We began talking about this, Agam, and you've been crunching the numbers. What are the headline numbers to start with, though?
Sure. So we do know and we're aware that Baring did bow out of the Mindtree deal, but in turn it has gone ahead and bagged NIIT Technologies. So from what we understand, it is seeking 56% controlling stake in NIIT Technologies. It will acquire approximately 30% stake for about 2,627 odd crores in Mindtree, in NIIT Technologies at a rate of 1,394 rupees per share, and this is a 3% premium to Friday's closing market price. Moreover, And above and beyond that, Barings PE will also put in an open offer for an additional 26% after the completion of the first phase. And once again, it will allocate about 2,263 crores for the entire open offer. And the open offer will also be held at 1,394 rupees per share as on NIIT Technologies. Well, we're of course going to wait for to hear more from the management. From what we understand is that NIIT Limited holds nearly 23% stake in NIIT Technologies and will be moving out along with some of their promoters, which together hold around 30% stake. And according to one key holder in NIIT, that's Vijay Tharani, he has suggested that they will look to use these funds and invest it in NIIT Limited so as to make India, or rather NIIT Limited as the biggest education provider, and not only in India but globally as well. But we are waiting for further updates as to how this plan and this deal will go down in terms of time frames.
Thanks so much for that, Agam. Of course, Agam will be back to tell you more about that deal as and when details emerge. But let's take you through the other big deal that we came across last week. In fact, this comes in from the financial space. Mid-sized private sector lender Lakshmi Vilas Bank's board gave an approval to merge with mortgage lender Indiabulls Housing Finance in a share swap deal. To tell you all about the details of this, Vishwanath Nair is joining us on the phone line. Morning, Vishy. Thanks so much for joining us this early in the morning. What are the details that you're picking up with regard to the share swap ratio and the numbers that you've already done the crunching on?
So, Alex, good morning. What we understand from this, from the statements that both companies, as well as Lakshmi Vilas Bank as well as Indiabulls Housing Finance, put out on Friday, for every 100 shares of Lakshmi Vilas Bank, their shareholders are going to receive 14 shares of Indiabulls Housing Finance. So, because of this, Indiabulls Housing Finance is going to be going to end up being the majority shareholder in Lakshmi Vilas Bank, holding about 94%. In part, as part of this, the Indiabulls Housing Finance promoter as well as Indiabulls Group promoter Samir Gehlot will end up owning about 19.5% in the bank after this entire merger is complete. But remember that throughout the management, both the bank as well as the mortgage lender have clarified that this is still pending RBI approval. So the RBI typically does not allow an NBFC to hold a certain amount of stake in a bank. In fact, Indiabulls Housing Finance has already been denied a banking license in the past, back in 2013, when it had applied for a universal banking license. So it is not yet clear whether the regulator is going to give its final approvals for this deal. But that part of the deal is still pending. S.S. Mundra, former RBI Deputy Governor, this the organization. While on Lakshmi Vilas Bank side, they have two board members from the RBI. However, the RBI clarified over the weekend that both these members did not have any opinion on the deal, because whatever opinions need to be made will be made by the RBI head office when the bank approaches the RBI for this approval. For the combined entity, the total loan book is going to be about 1.23 lakh crore, while its NPA ratio is going to be around 3.5%, net NPA ratio of about 2%. What we do also understand from these announcements is that there's going to be some kind of synergies, especially for Indiabulls Housing Finance, because it will get access to deposit funds, which are much cheaper than raising funds in the market. It will also end up getting a lot of geographical diversification, because Indiabulls Housing Finance has been strong in the north. So Lakshmi Vilas Bank opens up the south for them to expand their businesses. It is not yet clear whether Indiabulls Housing Finance will be separated from the bank and kept alive, or whether it will be merged with the bank's book. But of course, all of that will get clearer as the RBI approval comes in.
Absolutely. Thanks so much for that, Vishy. Well, meanwhile, while we try to get some clarity on the RBI's perspective on this deal, let's take a look at what the managements of both the entities had to say about this proposed merger.
In the first place, of course, the bank's existing promoters, of course, have a relatively small stake, somewhere in the region of 7+%, which will drop down substantially, of course, post the merger. And effectively, the Indiabulls promoters' stake would then result in somewhere in the region of 19+%. And that is what the calculations indicate at the present moment. However, that is subject to, of course, any changes that might happen between now and then. We've largely seen through our NPA problem, and the stress the stress has already played out mostly. So going forward, it's a relatively clean bank that we see today. Now, whatever is an NPA at this present moment, of course, is out there, and the effort is to recover as much as we can from it. And I don't really anticipate this becoming an issue in the merger.
I very, very emphatically deny that. It's the most transparent, upfront manner. Coming back to 2013, well, there were 27 applicants for the banking license at that time. We were just one of them, and only the 2 got. That doesn't mean the others were not found fit or proper. Having said that, a lot has changed between then and now. Now we have a very, very clear framework for the new private sector banking license on tap. We also have guidelines for facilitating mergers between non-banking finance companies and the banks. And we, in true letter and spirit, we qualify under all the parameters, under both guidelines for the new banking licenses as well as for the merger process.
Okay, some of the important stocks that you need to watch out for today. First of all, watch out for Tata Steel. The production sales number are out. The India sales were very robust, up at 4.47 million ton versus 3.07 million ton. And remember, this is on account of acquisition of Bhushan, so that is there is more traction that's happening there. The India sales number was up at 4.73 million ton versus 3.03. The European sales were pretty flat in trade, and the production as far as the Southeast Asia numbers were concerned, they were also flat in trade. HDFC came out with the fourth quarter update. What they're saying is that the loan assigned was at 2418 crores versus nil on a year-on-year basis, and the income from dividend was up 62% at 537 crores versus 332 crores. HDFC Bank came out with its fourth quarter number. The loan growth remained strong at 24% year-on-year growth and 5% QOQ growth that came in. Deposit growth was at 17% versus 22% in the last year. Ratio of loans to deposit moderated to 89% versus 92%. Morgan Stanley says that the initial update indicates broadly in line numbers and strong trends. NBCC appoints Shivdas Meena as the CMD of the company. Anup Kumar Mittal goes out of the company. JK Tyres, the promoter, pledged almost 4 crore equity shares for a loan. Sagar Cements will be in focus. Consolidated sales for March was up 8% and consolidated yearly sales was up almost 22%. And Solara Active block deal was there on the counter. The counter did manage to move up. CVR Enterprises bought in 3 lakh shares. Norges Bank was the seller.
On the big brokerage call for the day, first we have is JP Morgan on Biocon. Now the brokerage has initiated coverage on the stock with an overweight rating and a target price of 775. Now the brokerage is expecting the earnings visibility from biosimilar segment to improve for Biocon. Now the existing products and the new launches are expected to help Biocon achieve a $250 million in revenue from the biological segment by FY21, says the brokerage. Now this also implies a higher margin for the company going forward, according to the brokerage. Now along with this, Biocon's sticky emerging market business and deep pipeline differentiates itself from the peers. Lastly, the brokerage says that the valuations currently are not factoring in the full upside potential of the biosimilar pipeline of the company. It also says that over the next few years, monetization of this pipeline will contribute the most to the EPS growth of Biocon and will be the key driver for the stock, says the brokerage.
All right, thanks so much for that, Samit. Now, let's leave you with a bit of a story that emerged last week, said to be the costliest divorce in history. It will make Mackenzie Bezos the 4th richest woman in the world after her divorce from Amazon founder Jeff Bezos is finalized. That's all we have for you in this edition of All You Need to Know, but do stay tuned over the course of the day and we'll bring you all the updates from the world of business and markets.